All right, welcome back to Market Day Report. I am Scott Shellady, otherwise known as the Cow Guy, here for you on this Monday morning, getting ready to see in the Christmas weekend coming up on Sunday. All right, let's take a look at what these markets are doing. Are they in the Christmas mode? I think they are, but they've been a little bit easier here. Let's talk about 7 cents lower in March corn to 6.46 3/4. Well, we've got May down 6 3/4 cents to 6.46 3/4. As we move along to see what the soybeans have for us, they too were a little bit easier early on. They have double-digit losses here, 15.5 cents lower in Jan to 14.64.5, about 4 cents off the lows there. March is down 16 3/4 cents to 14.67 1/4. How about wheat in Chicago? Chicago wheat. Well, what do we have happening there? Between, say, 7 and 8 cents lower across the board. March is off 8 3/4 cents to 7.44 3/4. May's down 7.5 cents to 7.53 even. Let's move over to see what the hard red wheat in Kansas City is doing now. These prices are brought to us by Bar Chart. Get that in there. March is down 11 cents in Kansas City. 8.33 even is last. May's down 11 3/4 cents to 8.26 1/4. Moving right along to Minneapolis. Minneapolis wheat, the hard red, this is a spring wheat, sorry. 3.5 cents lower in March. 9.06 is last. Bouncing off that $9 level. We've got May right around that level right now, $9 3/4 cents. That's 4 cents lower as we speak. And then finally, let's take a look at cotton. That's been quiet all morning. It's only up 49 points right now at 82.41. All right, that gives me the opportunity to bring in my next guest analyst. He's actually in studio. Thanks for showing up with us here today on this holiday week.
Yes, sir.
Chris Swift from Swift Trading. Well, those are the numbers.
Yeah.
You got any thoughts?
Holiday. Everything's kind of working on the extended holiday. We're really not putting a lot of emphasis on anything because the volume is so thin and you don't have the big major houses in there trading. And everybody's just kind of contracting down, waiting for the holidays.
Right. It'd be disingenuous to say that there's anything, or trying to make something up about it.
Oh, yeah, absolutely. Because you can make all kinds of things up. But,
well, and there definitely will be people doing that today, I'm
yes,
sure.
most
There's some
definitely.
brokers out there that are going to be using their imaginations on
Yeah,
it. But
getting prepared for next year.
I would say one thing, though, I do like about these markets is that I said this in the last segment. You know, we talk about it being, you don't want to be in there chasing things around. It's a bad time to be actually participating. But it's not a bad time to take advantage of it, per se. Like, you can have some wish orders in on the buy side way lower, or some wish orders in on the sell side way higher. That's not a bad idea to take advantage of the craziness, right?
No, not at all. And preparation. I mean, if we did some strategic planning in the office a couple of weeks ago, and we realized that we often failed. We never planned to fail, but we often failed to plan. So that's a good time to take and look at the markets while they're not out there really doing a whole lot, and kind of get ready for next year, because they're going to come out of the gate really, really hard and fast next year, regardless of whether it's up or down. There's going to be a lot of companies making moves in anticipation of what the year is going to be like.
Well, because we want to talk inflation, because we do have higher prices than we did this time last year. However, that inflation talk is slowly but surely moving on to recessionary talk. And what we've seen as far as our economic situation start to decay going into 2023, my worry is that we've got the most expensive crop we're putting in the ground of all time. And at the same time, you got the Fed beating up demand, and we could see some deterioration in that economy as we're waiting for this stuff to harvest. That could be a little dangerous.
It could be, but clearly the government is still spending, and probably going to spend at a greater rate than what we are. So it's going to be the most inflationary recession we've ever seen.
Right. I've been doing it for 36 years, and I've never seen the Fed raise interest rates into the teeth of a recession in my entire life.
Right.
And that's something we have to be worried about. But also something I want to bring up, maybe we'll do it in the next segment, but to your point about inflation, they're going to try to get through this $1.7 trillion omnibus bill, which is absolute insanity. You know what I would say? They're spending like drunken sailors, but that gives drunken sailors a bad name. Because drunken sailors only spend their money and then they stop, right?
This is everybody else's money.
These people spend everybody else's money.
It's easy to spend somebody else's money. It really is.
And so that's one thing we're going to have to worry about then. And also, we've got maybe if the Fed stops raising like they think they might, that could spur on a cheaper dollar. And that would be also inflationary. People don't think about that. So you have two fairly large inflationary things out there. So while the Fed's stepping on the brake, you got a couple of things that are stepping on the gas, and that could be another crazy year. So stay right there. We're going to go away. We're going to pay some bills. We're going to come back and talk more with Chris Swift after this. All right, welcome back to, what do we got? I almost said commodity wrap, but that's a whole different show.
Day to go.
Market day, yeah, right. Maybe I'm wishing it away. All right, this is Market Day Report. Let's get to some prices when it comes to the ags. Let's talk about meats. Let's talk about live cattle. Quietly better. Feb's up 25 cents, 156.02. We got April up 30 cents to 160. Don't let anybody try to tell you there's a lot going on there, because we can tell there's not. Feeders are down. Jan's off 80 cents to 182.97. And we do have March tailing off here just 7 cents to 184.62. Let's see if lean hogs can hang on to that gain they had on Friday. Well, they're trying. Not bad, I say. February's dish down 57 cents to 85.20. And April's down a dime to 92.62. Let's bring in our guest analyst, Chris Swift, who's in studio with Swift Trading. My worry for next year is this. Everybody kind of wants to be bullish a little bit this cattle issue because we're going to have production off next year, and it's starting to eke into the market. You can see these prices. But, man, there was every reason to get long cotton last year, too. And we just didn't have that demand, right? And so if you liked cotton at 150, you should love it at 75, right? We've got to be careful about getting out over our skis here and not seeing that demand show up if the Fed's successful in what they want to do.
Oh, there's no doubt. And we do know that the supply situation is going to be interesting, to say the least, going forward on there. And we do realize the demand, but you have to look at an aspect that says, to going back into another bear market, we've got to think we have to liquidate these cattle. Nobody wants them. And we have enough packing capacity and fewer cattle that it's less likely to see that. I've just got to get rid of them. So even if consumer demand slows just a little bit, we may not see cattle prices or beef prices continue to soar, but the likelihood to go into a bear market diminishes greatly.
Well, that's good news, because I think next year is going to be the year of demand. We have to really be careful about getting out over our skis and kind of playing that one softly, because of what the Fed's going to be trying to do at the same time, what the economy might be doing. We've got an unemployment rate of 3.7%, and there's every likelihood that could be well over 4%, maybe even 5% next year. So that could change things a little bit.
It could, but those are big macros in there, and on the smaller section of it in the micros, we've got fewer cattle and greater packing
100%.
capacity, and it was just the reverse for the last 6 years. So we're just starting to turn the corner.
All right, well, we'll leave it on that. That's a good one to leave it on. That's good news. I appreciate you coming in, Chris Swift from Swift Trading. I'm Scott Shellady, the Cow Guy, and that's us. That's it from us here in Nashville. I can throw this back over and say good morning one more time to Janet.